Hi guys, back to another video. In today's video we're discussing what is happening in Japan and how we can use it as traders to get trade ideas. So, at the moment in Japan, the government, the parliament has basically dissolved and they've called for a snap election. So the president, prime minister, whatever you want to say, the leader of Japan is going to be getting re-elected in the start of February. They only managed to last 3 months because of what the hell has been happening to these bond yields and why it's so detrimental for their economy. So first of all, what is happening? So as you can see, if we go to the bonds, the Japanese bonds, here we go. Here's a 10-year Japanese bonds yield. What you immediately see is how much they've risen. It's crazy. They've become so overextended. And why is this? So a bond, first of all, for people who don't know, a bond is like a loan, right? When you buy a bond, you're lending the Japanese government or a company. You can get company bonds, you can get government bonds. You're lending the company or the government money in return for a yield. It's like an interest rate, right? You know, they pay you interest, or what's called in the bond terms, a yield. So you can see the yields getting nicer. So why is this happening? Well, first of all, because Japan has a huge issue of inflation, a lot of people aren't buying bonds. They're investing it in better things like gold at the moment. You can see gold is absolutely skyrocketing. You know, as you can see here, gold's a better investment. They're not buying these government bonds. So what they're doing to compensate for that is making them look much better. So they're increasing these yields. They're increasing these interest that you get paid for giving the money to the government. But the big issue of that is, first of all, prices for these bonds are getting cheaper to make them look better. So the Japanese government are getting into more and more debt because they're having to pay people more interest. And why is this so bad? Well, it comes back to inflation. If they have to borrow more money to pay people, as we know, Japan is a country with a lot of debt. It's a very bad debt to GDP ratio. It's a very high one. So they're a country that is very dependent on the Bank of Japan. So they have a high debt economy. So if they carry on by borrowing more money, that will just increase inflation. The cost of money will be more, right? Money tightens, borrowing costs rise. You have like things like risk assets that feel more pressurizing. There's lots of different things that will happen. And Japan has always had a very low interest rate, so people haven't really been saving the money in savings accounts. In the past, what's been working is them investing it in bonds because they get a better yield. Or so, because inflation has now risen, and that has now risen so high because of this whole bond crisis that they're having, this has really affected the economy, which is why they've caused the snap election. And the whole point is, can Japan still control, its bond market? So that is the big thing at the moment. We'll have to see in the coming weeks and months if they can control this, but at the moment it looks like they can't. So this is pretty bad for the market. As you can see, if you look at the price of the yen, if you go to the yen basket, I mean, look how weak it's been. Just for so long, the yen, compared to other currencies, has just been dropping and dropping and dropping, whilst the yields of the Japanese yen keeps increasing. So their currency is getting weaker and weaker and weaker, their bonds are getting weaker and weaker and weaker, so they're getting into more and more debt and inflation increases. So how can traders react to this? Well, what we'll basically see is what's been happening with, for example, the USD JPY currency, which is something I trade quite a lot, JPY pairs. It's been very easy to trade because it's just been going up and up and up, right? And what will basically be happening is an intervention, because they aren't respecting fundamentals, right? They've increased interest rates. The only way to stop this is by sharply increasing their interest rates, but they can't really do that So it isn't respecting fundamentals in the market, which is a huge issue. So even though they've increased their interest rates up to 0.75%, they still aren't able to push up the value of the yen. If you can see, if you go to all of the JPY pairs, GJ, the pound is getting weaker and it's still pushing above the yen. AUD JPY, all of these different currencies, even NZD JPY is pushing up, right? So it isn't respecting fundamentals. So we'll see an intervention come in. I've already made a video on that, so I don't want to go into that already. I'll link that in as a card somewhere in the top right here. But everyone's wondering, with this snap election, what's going to happen. We've seen Russia recently just offload a bunch of gold, so we could see pullbacks in gold as well, but it's causing a lot of upset in the market. So if we go to the Nikkei 2025, a lot of people are putting their money into the Nikkei, which is exactly why this trade was so beautiful. This is a great opportunity to buy the Nikkei. This is what sort of trading you guys should be looking at. Why is the Nikkei a good example? Because Japanese bond yields are going up. People aren't investing in bonds, as you can see. If they were, then Japan wouldn't have to increase these yields so much to compensate for what's happening. But they are having to compensate, which is why they're increasing yields, borrowing costs are getting more expensive, etc. for them. So people putting their money in things that are going up. They're putting their money in things they can get returned. So the Nikkei, the indices in Japan, Japanese investors are not going to look to the currency to invest in because it's so weak, And they're only be looking at things like this. Why has Nikkei increased so much recently? Because exactly what I'm talking about these bond yields. It's sharply pushed up this year because of the yields. It's all in proportion to each other, So if you look at the US bond yields, this is another example. The US bond yields have been pretty stagnant. Nothing's really been happening with them. We're now starting to see a push up on them, push up on yields, and we also starting to see some strength in the USD dollar as well. So yeah, if we look at the NAS, it's also looking stagnant as well as these bond yields, and now we're starting to see pushing up from. We can see we've just made a dip on the NAS. It looks like we're going to go and break even highs because these bonds are getting more valuable. Well, that they're increasing their yields. So this is an economy that's actually working compared to Japan, though, where the dollar's getting more expensive. The yields are going up, but in Japan, the yields are going up. The yen's still weakening. So we aren't seeing fundamentals getting respected in the market, which basically means an intervention has to come in. The US don't need to intervene because nothing's really going wrong. Their economy actually isn't that bad. So yeah, that's why this Nikkei opportunity is so amazing. And what was the entry? People took in my Discord. I actually didn't manage to get this trade. The entry was at 11 o'clock at night, but so I was actually asleep. So we had these double tops, double highs to the left here. Once price came down, I was looking at this level of daily demand, and this is where people bought off, and now their TPs are at the highs here, and it's looking very nice. And we just had some news come out today. If you look at the Forex Factory, we'll see JPY, Bank of Japan policy rate. They haven't done anything to interest rates. They've just kept them the same, which is bullish yen news if they've kept them the same. Which is why we've seen a bit of a full pullback today in the indices and also on UJ, if I go to it here. So that's how you can use bonds as a way of trading it. They're super powerful. When you see bonds go up, yields go up, the prices of that currency should also go up. In the case of Japan, that's just not happening. Why is it not happening? Because inflation, people aren't investing in bonds, and interest rates are even though they've increased interest rates, the currency is still not getting stronger. So they've had to call a snap election, they've had to intervene in the market. They're having to now push down the value of the USD JPY to stop these carry trade from pushing up the yen even more, pushing up the UJ even more. So I do hope this has helped people, this video. And if you've enjoyed it, smash the like button and subscribe. And I've also got a free Discord in my link in the description. And yeah, I'll see you in the next one.